Tariff Day in North America. I mean, here we go again. Hello and welcome to the Northern Miner Podcast. Across the entire PDAC convention and around the world, my name's Adrian Pocobelli. Never a dull moment here. I've been saying that since the summer of 2019 when I started doing this podcast. I've always been pretty impressed at how interesting the mining narrative is, and it's only gotten more so. I mean, I had to laugh. Reuters, they had an article, let me bring it up here. They had a headline, basically a column, "Critical Minerals Take Center Stage in World Politics." And I thought, you could read it on Reuters on February 28th, or you could listen to Northern Miner the last 5 years. And it brings up an interesting question, and big shout out to Reuters who provide us with some of the most amazing stories that we discuss here. But it brings up an interesting point, which is it's not really publicly discussed until, I would argue, relatively recently, let's call it post-COVID, with the concerns about the supply chain. But it seems quite clear that there is a huge concern from policymakers or governments around the world for natural resources. And here we are, this Ukraine war. At the start of the war, they were not talking about natural resources. Okay, there is gas to Europe, there's Nord Stream. But overall, it wasn't really at the center of the story. But I would argue, inevitably, it has become the center of the story here with this minerals deal that the U.S. and Ukraine were attempting to sign, seemingly. So really, this Reuters column, it really says what we've been saying here for, years. Scrolling down, critical metals have become the new bargaining chip on the geopolitical card table. Is it new? Haven't they always been? It's an interesting question. Because I would say pre-COVID, I think you could say natural resources, particularly the metals, were ignored. The mentality was there was an endless supply of this stuff, and that really we didn't need to worry about it. We didn't need to, streamline permitting times. We didn't need to create our own processing plants and refineries, smelters. But post-COVID, it really is a different story as we see this bifurcation, really, of the global supply chain. In a sense, up until that point, 10 years ago, China was more than happy to just deliver it all to us. And in a sense, the West was more than happy to consume it at the, very reasonable rates that they were offering. Right? But now, with all of the tensions and with China really becoming an economic force where they are building, let's say, potentially as good of cars as the West, it's easy to forget that was almost considered unthinkable 4 years ago. And I still hear this mentality when it comes to the aerospace industry. We saw it with the Airbus CEO about a year and a half ago was kind of gently mocking how the Chinese had made quite a similar version to their plane and almost kind of dismissing to a certain degree, with a laugh, China putting planes together. But as I said at the time, I think that person should be panicking. And look at what we've seen with cars. Who's to say that's not going to happen with aerospace? But let's bring it down to what is happening today. Apparently at midnight, tariffs have gone into effect. If everything is going to go as scheduled, we never know with President Trump. There may be a last-second deal, but it doesn't sound like there's going to be one, and markets tanked yesterday on the news. So Doug Ford, Ontario Premier, who I just saw on X, I assume it's true, was threatening to cut off the electricity to the United States. Talk about slash and burn. So Doug Ford was also at PDAC, of course, the world's biggest mining conference, which is taking place right now in Toronto. And here's the headline from Colin McClelland at the Northern Miner: Ontario's Ford backs miners, bashes tariffs. Ontario Premier Doug Ford repeated funding pledges for mining, scolded the federal government for time-consuming environmental okays, and vowed to fight potential U.S. tariffs on Tuesday, dollar for dollar, and, quote, to the death. End quote. Ford capitalized on his provincial re-election win February 27th to declare Monday that he has a mandate to push for changes in mining rules, as well as fight any U.S. tariffs. Quote, we also propose designating regions where critical minerals are present or likely to be present, including the Ring of Fire, as regions of strategic importance for our economy and security, end quote, he told the Prospectors and Developers Association of Canada annual convention in Toronto. And again, I keep saying this, for people who've been around 10 years, like, what a far road we have traveled together. Again, from a completely dismissed and hated industry to really, I would argue, as I have for a while here, the center of the conversation. It is the beginning of the supply chain. And as we see with China, if you don't run the beginning of the supply chain, you are simply at a structural disadvantage. See recent bans on exports of important metals, including restrictions on graphite, of all things. It's kind of a lesson, even beyond mining and minerals. It's kind of a lesson in cyclicality. When things look like they're dead or that they could never change, that's when you should be paying attention. And I mean, this was almost unthinkable, I would argue, in 2016. Doug Ford continued, quote, "This would trigger accelerated approvals, including automatic approvals for trusted project proponents on early works. It would increase certainty around timelines and help First Nations participate in the process," end quote. A new Ontario $500 million critical minerals processing fund, first announced February 23rd, aims to accelerate development projects for turning ore into metals by attracting large investors. I mean, that is impressive. Not only are we going to streamline the development of these projects and the permitting, in fact, they want to do mineral processing. I mean, how impressive, frankly, to editorialize is that? Let's continue. It's part of the West's strategy to reduce China's control of most refining, such as copper, nickel, and lithium, where it has more than half the market, as well as near total dominance in lithium and rare earth elements used in electric vehicles, as well as graphite, I might add, according to Wood Mackenzie. The premier continued, quote, "We have the critical minerals the world needs and the world-class workforce to get them out of the ground. But we don't want to see those minerals ripped and shipped overseas or south of the border to be processed. We want Ontario's critical minerals to be processed and refined right here by Ontario workers in Ontario." So music to the ears of the host of the Northern Miner here. Why wouldn't they? Why wouldn't they? As I've been saying here, if I'm the UK and my economy is stalling, like what I would do is become a hub of processing. So Ontario, very interesting developments. I mean, really, to me, this is taking a page out of China's playbook here in a good way. Let's build some metals processing. And another way of almost stating everything I've stated here so far is, from a mining perspective, isn't it nice to get a little respect around here? Isn't it nice for people to kind of appreciate what is going on in this industry? It really is refreshing because it's really easy to forget, especially for those that weren't around, how absolutely hated and dismissed this industry was only 10 years ago. And here we are. This is how we're going to fix Ontario. This is going to be a major plank in strengthening the Canadian economy and Ontario's economy. I want to do a dance here. Let's continue. Ford's Progressive Conservative Party also said last month it would triple loan guarantees for First Nations to $3 billion and add $70 million to an Aboriginal skills program. I keep not wanting to interrupt here, but if Canada wants to become a powerful country, this is exactly, to editorialize from this host's point of view, this is exactly what should be done. Legislation will have to wait until at least March 17th when the cabinet can reconvene in the legislature, Ford said. He urged Ottawa to, quote, "get out of the way," end quote, when it comes to approving mining projects. Quote, "I'll be making it clear to the federal government that the time for the redundant, wrong-headed impact assessment requirements is over. They're done. We cannot afford to add years and years of delays, massive costs to critical metal projects so that the federal government can waste time repeating and replicating assessments that Ontario has already done," end quote. And I think of Stephen Stewart, where I said, what is the one thing that could help you? And it would be to streamline the permitting process. And here we go. So grounds for optimism, I would argue. And finally, Premier Ford on the tariffs, quote, "For the president, I'm a different type of cat. I'll fight tooth and nail. I'm not going to roll over and get annihilated. I'll fight right to the death. Not that there's going to be any deaths, but, the economy, I will go out there. He has no idea. He has absolutely no idea. End quote. So, again, a little bit of slash and burn here from Ford. Just on that front, remember 2-3 weeks ago when the premiers went to Washington to discuss the issue with the president? Like, the reporting I saw gave me the impression that the premiers were not treated very well at the White House. And I wonder to myself, when you see the, for lack of a better term, aggression of the premier, if it has something to do with how they were treated when they went down there. I wonder to myself, because it seems like there is, I don't want to say a tinge of emotion, but these are, fighting words, as they say. So let's continue here. We have a lot to get through. Continuing on the tariffs, we have a story from Reuters. Alcoa warns Trump's aluminum tariff could cost 100,000 U.S. jobs. And remember last time at the end of January, where they had written the letter to the White House, the Aluminum Association of America, I believe it's called, wrote to the White House and said, you're going to devastate our industries. Well, now it's Alcoa saying it. Aluminum producer Alcoa said on Tuesday that U.S. President Donald Trump's plan to impose a tariff on aluminum imports could cost about 100,000 U.S. jobs and would itself not be enough to entice it to boost production in the country, which seems to be the goal, right? Trump earlier in February said he would impose a flat 25% tariff on aluminum imports without exceptions or exemptions in a bid to lift U.S. production of the metal used to make automobiles, cans, and other products. The tariff takes effect on March 4th. Which is today. So I guess we're going to find out in the next few hours if everything is actually going to be implemented here. You kind of never know with Trump. It's not over until it's over. Pittsburgh-based Alcoa, which produces aluminum in Canada, Iceland, Australia, and elsewhere, had trimmed its output in the United States in recent years, partly due to electricity costs. Bill Opplinger, Alcoa's CEO, told BMO Global Metals and Mining Conference in Florida that the tariffs could cost about 20,000 U.S. aluminum industry jobs and a further 80,000 jobs in sectors that support it. Quote, this is bad for the aluminum industry in the U.S. It's bad for American workers, end quote, said Opplinger, an engineer by training who became CEO in 2023, in webcast remarks. And scrolling down a bit, the tariffs alone would not be enough to entice Alcoa to restart some of its shuttered U.S. facilities, the CEO said, adding that Trump officials have asked the company to do just that. Quote, it's very hard to make an investment decision, even on something like a restart, without knowing how long the tariffs will last, end quote, Opplinger said. And it kind of reminds you of, I believe it was the Ford CEO, like a week or two ago, saying, the chaos is costly, sharing a similar frustration with the lack of clear guidelines in order to plan the business. He also said that he had lobbied Trump officials for an exemption on Canadian aluminum imports, and we remember that letter from earlier this month from the Aluminum Association. Alcoa would consider boosting U.S. output if it had cheap supply of power, which its Icelandic operations enjoyed, Opplinger said. Aluminum smelting consumes large amounts of electricity, and I think of Javier Blas's book, The World for Sale, where he was discussing how traders would refer to aluminum as congealed electricity, to illustrate just how much power is required. So interesting developments there. Also, copper on the menu here. Trump orders new tariff probe into U.S. copper imports. That is Reuters via mining.com. And another headline, this is Reuters. Potential U.S. copper tariffs seen costing domestic industry dearly. The U.S. industrial sector will have the most to lose from potential U.S. tariffs on copper, analysts say, with costs seen rising significantly during what would be a lengthy process of reviving domestic mining and refining of the metal. And this is exactly what I discussed with Charles Sosnow, which was, if the intention here is to foster production in the United States, this does not happen overnight. So what is going to happen in the meantime? Also, the ex-Codelco CEO weighing in, copper tariffs to hit consumers. This is by Frederick Tomesco, Cecilia Jamasmy, and Henry Lazenby at the Northern Miner. Potential U.S. tariffs on copper will only serve to drive up prices for consumers, because domestic producers won't be able to make up the shortfall, the former CEO of Chilean mining giant Codelco says. Implementing such a measure as part of protectionist policies to boost domestic copper production would not be beneficial for the U.S., Marcos Lima, Codelco's former CEO, said Friday. Lima is a founding partner at the CIS Consultores Consultancy in Santiago. And here's a quote that Lima said Friday via email, quote, "The only thing that will happen is that the price of copper in the United States will rise. It's impossible for the country to increase its production levels overnight." So we're back to the theory that perhaps if we were to give the charity of interpretation to the Trump administration, it's back to this idea of taking the pain early. But it seems to me the pain could be dramatic, and the market seems to be reflecting that. So let's see there. Also, another interesting story from Reuters. Trump's tariff threat presages turbulent times for Dr. Copper. This is a column. 3/4 the way through it. This is what it says. There's plenty of turmoil beneath the tranquil surface in the form of time spread volatility, referring to the copper market. The benchmark cash to 3-month spread flipped from a comfortable contango of $100 per ton to a backwardation of $250 per ton on February 14th and is currently trading close to zero. The Valentine's Day massacre of short position holders was a one-off liquidity clear-out, but the subsequent tighter tone is down to a clear-out of physical stocks held in LME warehouses. Almost 100,000 tons of LME stored copper have been canceled, and my understanding is when contracts are canceled, that is when basically it means it's leaving the exchange. So almost 100,000 tons of LME stored copper have been canceled over the last 4 days in preparation for physical loadout. So interesting development there. And meanwhile, the real world business of mining, Chile power grid flickers back to life after huge outage and copper mines come back online. That's Reuters via mining.com. So meanwhile, they're having power problems in Chile, a major producer of copper. And finally, just a few more headlines on the tariffs. Iron ore price at more than 6-week low on mounting tariff tensions. And this is Reuters via mining.com. Iron ore futures fell for a 6th straight session on Monday amid rising trade tensions between the U.S. and top consumer China, outweighing upbeat Chinese manufacturing data. Another headline, EU promises support for steel sector as U.S. trade tariff looms. This is Reuters via mining.com. The EU Commission on Tuesday said it will present plans to make Europe's ailing steel sector more competitive and to shield it from looming U.S. trade tariffs in the spring. Its action plan will follow a, quote, strategic dialogue, end quote, with key representatives of the sector chaired by Commission President Ursula von der Leyen on March 4th, today. Europe's steel industry called on the EU Commission in November to take immediate action to avert what it termed the sector's irreversible decline. It urged the EU to come up with plans addressing trade, the EU's carbon levy on imports, energy and scrap as part of broader proposals to help companies reach the EU's 2050 carbon neutrality goal. And here is a quote from von der Leyen, who said in a statement, quote, "The steel industry is a key sector for our European single market. At the same time, this industry is of utmost importance in our fight against climate change. We want to ensure that the European steel industry is both competitive and sustainable in the long term," end quote. So all sorts of changes happening here in global markets. And so with that, we have Dean McPherson, TMX Group head of global mining. We discussed the Toronto Stock Exchange and the TSX Venture Exchange and what is going well, what are the difficulties and challenges that these exchanges are facing. And I have some news stories as well coming up in the news section to give us a little bit of context and some other viewpoints. And so an in-depth discussion with Dean McPherson this episode. And coming up in this week's Spotlight, we have Nathan Edwards of MPC, who discusses the company's processing chemicals and how it can really speed up the processing of gold. And Nathan describes all of the advantages that can give. And so a fascinating episode here, as always, in a fascinating beat. And thank you for joining me. If you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner. You can find us on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to Nathan Edwards, General Manager at MPC, for this week's Spotlight. Joining us today, I'm very pleased to welcome to the Northern Miner podcast for this week's Spotlight, Nathan Edwards, General Manager at MPC, also known as Mineral Process Control. Nathan, welcome to the show.
Hi, Adrian. Thanks for having me.
It's great to have you. I mean, processing is one of my favorite topics right now in the mining industry, and you guys are deeply involved in it. So for those that are unfamiliar with MPC, can you tell us a little bit of background of the company and what you guys are up to?
Yeah, so MPC, we're based in Perth, Western Australia. We're a small to medium-sized company that's been around since 1995, and we produce a range of products for the assaying and processing markets globally in gold and silver mining. We produce probably our signature product, which people will be familiar with, is the leach well product, which is a cyanide dissolution accelerant for cyanide dissolving gold, which is used in the laboratory and the plant. And we've also produced a number of other products, equipment and chemical-wise, which are sort of back on from that leach well product.
Okay, excellent. So you create basically chemicals, in other words, and is this geared towards certain metals in particular, or is this across the board? Tell us a little bit more about, say, the application.
Yeah, it's a good question. So basically, we target primarily the gold industry because, I mean, that's an obvious one for us sitting here in Western Australia. Our products, anywhere where you're doing cyanidation reactions, so it could be silver, it could be copper, but mainly gold. And our footprint is across Australia, but also Africa, Europe, Asia, and now into the Americas. So Leachwell is a product that was produced in 95. That was really the product that kickstarted the company. That's a chemical which is added to, for those who are familiar with it, tests such as bottle roll tests, which are recovery tests to see how well you can recover the gold or silver out of the ore body. That accelerates that by up to 60 times. So normally there's 24-hour bottle roll, which can take a reasonable amount of time. You add Leachwell to it, it takes an hour. So that's got great efficacy in the laboratory. But it's also then been, we worked probably 15, 20 years ago with Union Reef's gold mine to then use that in high-intensity cyanidation reactors such as the Acacia reactor, where you add leachwell with cyanide to then do a rapid dissolution of gold concentrates, which I won't go into, but it's a fairly significant process in gold mining. But then from that, we produced a range of equipment. We fabricate our own equipment on site for laboratory and process and the chemicals. So we produce an assay tab, which is a combination, a quantum 10 grams of cyanide and leach well. And the reason we've done that is one of the biggest issues with cyanide is handling cyanide from a safety point of view. So if you can combine that into a quantum where you just have to place that into your leach test, then that's a lot safer. So that's one of our main products. And then from that product stemmed probably our biggest one, which is the pulverise and leach, the PEL 1000 machine, which is a preparation machine which uses our signature assay tabs and can be used for assaying gold and silver from exploration all the way through to the mill processing plant.
So you've been expanding out, you have global reach, and now you're expanding into the Americas. So how has that been, in a sense, if you can explain to us, how can, miners, say, in North America, as well as South America and Central America, how do they directly benefit from, say, using MPC processing chemicals and equipment?
If I go to the PEL 1000, for example, which is probably the main product we're trying to push in with the assay tabs into those markets, there are 6 to 10 users already within that overall Americas market. And where they're getting benefit from is the machine itself. It processes a large 1 kilogram sample, relatively coarse 2 millimeter material, sub 2 mil, and it processes 52 samples in an hour. So that allows you to take direct from your drill rig, split down to 1 kilo sample, throw that into our machine, 52 samples, run with the assay tab in there. So what it does is it's a machine that basically pulverizes that 2 mil sample and leaches it simultaneously. So it extracts all of the gold rapidly out of that sample that can be extracted by the gold. And that's the important thing, is directly analogous with the processing plant. So it'll tell you exactly what you can get out of it. And you can then have a cyanide leachable gold assay very, very rapidly. The machine itself is very robust. The assay tabs are easy to use, and it lends itself to mine sites in those areas where they need quick turnaround on assay. They need accuracy and precision, which is gained through the 1 kilo sample and the reduced sample handling, and actual applicability to the processing plant. So those high turnaround, accurate and precise, and applicability, plus I should have mentioned actually low cost. It's about 20% of equivalent photon assay and fire assay for the same sort of assaying sample ratio.
Okay, excellent. So in a sense, if I understand you right, is this in a sense for, you might say primarily for exploration, where you want a quick turnaround so that you can get the information, you can find out what kind of, results you have, and then you can kind of, decide on your next target, so to speak. Like maybe it helps you inform on your next target. Is that the idea?
It's a good question. And primarily it's being used for mill-based process control at the moment, to be able to put parcels of sample through to fully understand what your mill's going to be able to recover from your ore body, but also for grade control, which is a mining / geology-based activity in the actual mine to determine where you can and can't mine. From the exploration side, we actually feel that it's got an application, but it's not necessarily being utilised in the way you're saying. And we do think there is an application there. So we're talking to a lot of people in industry now to try and get them to understand that it does have that application for the exploration market. Probably its biggest hindrance is that it's not a complete total gold assay. It's a cyanide recoverable assay. So if there's any hold up due to refractory nature of the ore body, you'll get a small amount that can't be recovered by the cyanide. But that's simply overcome by doing a fire assay and a composite of the tailings that comes out of the machine, which then gives you a very, very accurate and precise assay for exploration.
So as far as the team then, I mean, you have a background in metallurgy, right, Nathan? Tell us a little bit about the team.
We don't have a huge team, but we have a very knowledgeable team. So we have personnel who are geologists and chemists as well, and me as a metallurgist. So basically we've got the mine value chain covered from exploration, mining. We don't have a mining engineer, but we do have the laboratory side covered as well. And from my side, the processing side. So we do have, most of us have got 25 plus years experience in various aspects of the mining activities from around the world as well. And that enables us to produce products which are very, very specific and tailored to issues and problems that our customers might have. So the Pell machine itself, the assay tabs, they were produced after understanding the needs of our customers and the market in general as to what we could solve a problem in terms of handling cyanide, fast turnaround, large samples, etc. So the team is very experienced, and we can leverage that in terms of providing solutions.
Okay, so excellent. So if you can summarize it for us then, Nathan, what do you want people to know about MPC or mineral process control? What would you like them to know as a takeaway here as we wrap up?
So what I want people to know is who we are, what products we provide, and really to delve into through our website and our YouTube channel, which you can easily find via the website, what the range of products that we provide and the technical data behind them, so they can then look at it, understand where that fits and what problem that will solve in their laboratory or mine site, and then really get in contact with us so we can talk to them about the best fit.
Okay, excellent. So that's mineralprocesscontrol.com.au. And you can also go to the contact page. Is that the best way to contact the company?
Yeah, that's the best way to contact us, through the webpage, and then we have a contact us form, or you can email us at info@mpcwa.com. What we do have is a range of distributors in each of the major mining jurisdictions who carry our products, and then we can basically send you in the direction of those guys, and they're well trained in our products, and you can start talking to them.
Right. And you even have a distributor, you're saying, in Vancouver. Is that correct?
Yeah, so we have a distributor we've got a partnership with. They're called STG Mining Supplies. They're based in Vancouver and also Sudbury. So they carry all of our chemicals and equipment. They have a number of contacts already. They've been around for a while, and they're talking to the market at the moment in that part of the world as to our products and where they fit.
Nathan Edwards, General Manager at MPC, also known as Mineral Process Control. Thank you for joining us and sharing all that you're working on at the company on this week's Spotlight.
Thanks, Adrian. Thanks for having me.
And thank you once again to Minerals Processing Control for sponsoring this week's episode of the Northern Miner Podcast. You can learn more about MPC at mineralprocesscontrol.com.au. Turning to the website relating to our feature content here, Toronto Exchange's mining dominance under threat as explorers exit. This is Bloomberg News via mining.com. So Dean does discuss the difficulties that explorers are having. And so here is a story by Bloomberg on March 3rd, so just yesterday. Toronto's claim as the world's top mining hub is under threat as exploration companies leave Canada and listings dwindle on the nation's resource-heavy stock exchange. Canada's once thriving mining industry is facing challenges to its decades-old model, in which explorers and developers woo investors with promises of mining breakthroughs and established producers feed on their success, swallowing them in lucrative takeovers. Industry consolidation has reduced head offices and eliminated listings. Companies find it harder to attract investors, and government rules on foreign investment have become more restrictive. And here's a quote from mining financier Pierre Lassonde, who co-founded Franco-Nevada. Quote, "The industry that has fueled most of the great minerals discoveries over the past 50 years is but a skeleton of itself. We should be extremely concerned," end quote. 3 small firms shut their Canadian headquarters in the past 9 months to relocate to other countries: Lithium Argentina, Solaris Resources, and Falcon Energy Materials. At least 2 others, Cornish Metals and El Monte Industries, are embarking on similar plans. It's not just small companies. Toronto-based Barrick Gold, the world's number 2 miner, has mused about redomiciling to the United States. As executives, bankers, and investors gather this week for the Prospectors and Developers Association of Canada conference in Toronto, the health of the industry is top of mind for attendees visiting this global mining epicenter. The Toronto Stock Exchange and TSX Venture Exchange represent 40% of the world's public mining companies, providing home to 1,097 listings, exchange owner TMX Group said in its latest listings guide. That's down from 2010, when the exchange had 1,531 mining companies to account for 56% of global listings for the industry. So it was 56%, now it is 40%. The decline comes as stock markets in London, Sydney, and New York have been competing to attract mining companies. Allied Gold is applying for a listing on the New York Stock Exchange, joining an industry-wide migration to the world's top bourse. The Toronto-based company would join a long list of gold miners that are on both Canadian and U.S. exchanges. Scrolling down a bit, the roots of the financing drought can be traced back to the commodities boom of the early 2010s, when miners borrowed heavily to fund ambitious exploration targets and mammoth takeovers. When markets crashed, it left balance sheets shredded and shareholders with dramatic losses. I'll never forget all of the headlines of write-downs in the 2010s at the Northern Miner. And we have a quote from David Garofalo, Chief Executive Officer of Gold Royalty. Quote, "The junior miners have been in nuclear winter ever since. The sector overspent on exploration, it overspent on expansions, and so there was a major hangover. Massive amounts of debts on balance sheets and significant cost escalation," end quote. Meanwhile, the growth investor interest in exchange-traded funds has supplanted smaller resource-focused funds that take positions in junior miners. And here is Jeff Killeen, Director of Policy and Programs at the Prospectors and Developers Association of Canada. Quote, "We've seen a market evolution over the last 10 years, a rotation away from those smaller resource funds into larger funds that are more passive, and that inherently brings up the threshold for minimum investment," end quote. And another quote from Pierre Lassonde here, quote, "As juniors, you get the money wherever you can, and if Canada can't be there for them, they leave," end quote. And finally, we have a quote from Dean McPherson, TMX Group's global mining head, who is featured later this program. Quote, "If the government keeps making it harder for companies to access global capital, it could impact Canada's overall health in the medium to long term. It means a loss of potential revenue and a loss of strength for Canada as a global destination for mining companies to be domiciled." So, very interesting. We're going to talk to Dean about all of these issues in our upcoming interview. Continuing on, we have PDAC coverage from the Northern Miner. Canada and Australia risk falling behind in investment race, according to BHP boss Mike Henry. This is by Frederick Tomesco at the Northern Miner. Canada and Australia could end up trailing emerging mining nations such as Argentina if their governments don't speed up permitting and lower costs, BHP CEO Mike Henry warned. Countries such as the United States, Argentina, and Saudi Arabia are making sizable efforts to reform their mining sector and attract capital, Henry said Sunday in Toronto. At the same time, established natural resource powerhouses such as Canada and Australia have seen their global attractiveness erode. Henry's comments come as the U.S. administration of President Donald Trump looks to spur domestic production of critical minerals in part by overhauling permitting requirements. And here is a quote also from Mike Henry, who said in a speech at PDAC, quote, "Just as in the case for business, nations need to remain competitive on the global stage or they will be left behind in the race for metals and minerals investment programs. The competitive landscape isn't static." The article continues, if a country isn't constantly benchmarking, quote, "it runs the risk of falling behind. Once capital mobilizes in one direction, sometimes it can be quite hard to mobilize in the other direction," end quote. Permitting delays are a key irritant for miners. And at least Doug Ford there in Ontario is speaking directly to this. New mines in Australia and Canada typically take from 10 to 15 years to get built, compared with as few as 5 years in a country like Chile, Henry said. Scrolling down a bit, quote, "Australia can no longer rely as heavily on its geological advantages, but instead must exercise its policy muscles to improve competitiveness. It needs to confront the fact that productivity growth is sluggish across the broader economy and has fallen in the mining sector across the past 2 decades, end quote. He also said policymakers, quote, "need to examine the entire set of policy and regulatory settings and ask whether they are making the country more or less competitive globally," end quote, the BHP CEO added. Compared with Canada and Australia, quote, "other countries are mobilizing a more urgent effort and have higher ambitions around this. That includes the United States, who's currently behind the curve, but could very well end up being far ahead of the curve if they carry through with some of their current intent," end quote. Henry is also optimistic about Argentina, given its reserves of copper, gold, and lithium. Quote, "Argentina could very well become a top 5 copper producer. Argentina is serious about competing globally. They know they need to attract capital to make it happen, and they are focused on unlocking the opportunity. Our sector is taking notice," end quote. So, Mike Henry sounding the alarm at BHP. Interestingly, it does seem like policymakers are getting the message, whereas 5 years ago, I'm not sure we could say that. Continuing on, more PDAC coverage. Canada extends mineral tax credit. This by Colin McClelland at the Northern Miner. So, as many people say, why they don't just make this permanent is unclear, but maybe the government likes to give the speech every year or two at PDAC is sometimes the theory. Let's take a closer look. Canada's federal government will extend a tax credit on mineral exploration by 2 years to boost investment in junior mining companies. Energy and Natural Resources Minister Jonathan Wilkinson told a conference in Toronto. The Mineral Exploration Tax Credit, a capital market tool that offers investors a 15% tax credit to invest in flow-through shares of small project holders, was due to expire on March 31st. Quote, "I am very pleased to announce that the Mining Exploration Tax Credit will be extended for another 2 years. This is a crucial piece to ensure capital is directed into early-stage mining development," end quote. Scrolling down, renewing the tax credit for more than a year and potentially making it permanent was one of the key demands of the PDAC. Failing to do so would have weakened the Canadian mining industry because the credit is a critical part of the country's fiscal landscape, Jeff Killeen, PDAC's Director of Policy and Programs, told the Northern Miner last month. And indeed, we had Jeff Killeen on the Northern Miner podcast, a very interesting interview, Director of Policy and Programs at PDAC, well worth digging up if you haven't heard that show. PDAC President Raymond Goldie told the Northern Miner on Monday it's unclear how the new measures can be implemented while Parliament is prorogued. Parliament is scheduled to resume on March 24th, but the NDP has vowed to side with the Conservatives in a vote to defeat the sitting Liberal government. That would trigger an election call, and all bills not passed would die. So, although it is the intention of the government, it is unclear whether they will be able to fulfill the mining exploration tax credit. Another headline from PDAC, Act Like a Startup to Speed Projects, also by Frederick Tomesco at the Northern Miner. Mineral projects need to enter production much faster if the world is to find the metals necessary to power the upcoming energy transition, attendees of the world's largest mining conference heard. Miners were urged to use artificial intelligence more extensively and to make their geological data public to spur discoveries, panelists said Monday at the PDAC conference in Toronto. To compress development timelines and avoid, quote, decision paralysis, end quote, it's also critical that miners start adopting a, quote, startup mindset, end quote. Quote, we're not on track for the energy transition, end quote. Tom Hunt, vice president of technology at Cobalt Metals, a U.S. mining startup backed by Amazon founder Jeff Bezos and former Microsoft CEO Bill Gates, told attendees. Quote, we need to discover hundreds of new resources and bring them into production over the next several years, and that's simply not happening, end quote. So it's interesting, this idea, which I've actually never heard of, making data public. Here's just a little more on this, scrolling down a bit. Making geological data public is essential to pave the way for the next wave of mineral discoveries, Hunt insisted. Quote, we can't work if you keep your data close to your chest. It takes 5 minutes to post your data, and that data will be there for the entire industry to learn from. This will drive discoveries, end quote. Miners shouldn't be afraid to use AI, said Rajesh Swaminathan, a partner at US-based venture capital firm Khosla Ventures. Quote, take those baby steps, but take them quickly because this industry will move very quickly, end quote. So very interesting. It seems like everybody is getting closer to the same page here, which is, again, not something we could say 5 years ago, frankly, even 3 years ago. There does seem to be a consensus emerging. One could argue. A few more huge stories here before we move on to metal prices. Congo suspends cobalt exports for 4 months amid glut. This is Bloomberg News via mining.com. I brought this up. How happy is Congo going to be if CMOC, the Chinese miner that is flooding the market with cobalt, is, digging up records amount of cobalt out of the Democratic Republic of Congo, keeping the price down, putting everybody else out of business, and Congo's left with a very cheap cobalt price. That doesn't really work for it, so it looks like the DRC took action. Interestingly, the Democratic Republic of Congo says it's suspending cobalt exports for 4 months to rein in oversupply of the battery metal on the international market. Cobalt production in Congo, which produces about 3/4 of the material used in electric vehicle batteries, has soared in recent years as China's CMOC Group ramped up output at 2 large mines in the country, causing supply to race ahead of demand and prices to tumble. Quote, exports must be aligned with world demand, end quote. Patrick Luabeya, president of the Authority for the Regulation and Control of Strategic Mineral Substances Markets, known as ARCOMS, told Bloomberg News in written responses to questions. The measures came into force on February 22nd, according to Luabeya. A day earlier, the Prime Minister and Mines Minister signed a decree seen by Bloomberg allowing the regulator to take temporary action, including barring exports, quote, in case of circumstances affecting the stability of the market, end quote. And finally, we have BMO Capital Markets analyst George Heppel, who said in an email, quote, the DRC has played its trump card. The move will likely send cobalt prices skyrocketing in the coming days and weeks, end quote. Very interesting. Another headline, China cobalt stocks jump as Congo export ban sparks chaos. Bloomberg News via mining.com. And here's a quote from the article from Ian Liu, Cobalt Procurement Director at CNGR Advanced Material, a Chinese battery component manufacturer. Quote, everybody is panicking, and we don't know how to secure the material. We need a long-term mechanism to support cobalt prices, not a sudden halt on exports, which will cause chaos downstream. End quote, he said at Fast Markets Conference in Shanghai on Tuesday. I don't know what, Congo is supposed to do, though. I mean, as I've pointed out here, they have China's CMOC basically flooding the market and then selling a significant, I think it's about 10% of annual supply to itself at rock bottom prices so it can stockpile. I mean, maybe the Congo felt like it had no choice. Interesting move there. Another headline, Paris prosecutor drops case against Apple over Congo minerals. So this is Reuters via mining.com. French prosecutors have closed a case filed by Democratic Republic of Congo accusing Apple subsidiaries of using conflict minerals in its supply chain, according to a document seen by Reuters on Thursday. Congo filed criminal complaints against Apple subsidiaries in France and Belgium, its lawyers said in December. Apple said then it strongly disputed the allegations and had told its suppliers that they must not use minerals in question sourced from Congo or Rwanda. In the document seen by Reuters and dated February 18th, the Paris prosecutor's office said allegations of money laundering and deceptive business practices were, quote, not sufficiently well-founded, end quote, and closed the case, meaning it will not proceed with the complaint. The office invited Congo to contact a different office, quote, with jurisdiction over war crimes, end quote. So they basically told the Congo, you're in the wrong office, submit your file again, as far as the war crimes issue. Interesting. William Bourdon and Vincent Brengarth, lawyers working for Congo in France, described the decision as a, quote, very partial dismissal, end quote, that they intended to challenge, citing the, quote, extreme seriousness of the facts denounced and the need to identify and prosecute those responsible, end quote. And finally, First Quantum steps up campaign to reopen Panama copper mine. This is Bloomberg News via mining.com. First Quantum Minerals and its workers and suppliers in Panama are stepping up efforts to gain support for the reopening of a $10 billion copper mine more than a year after it was shut. The company has switched from a low-profile approach to engaging with Panamanians in the wake of protests that triggered the closure to a far more visible one of mass mine visits and public events. Maru Galvez, public relations manager for the Cobre Panama mine, told reporters at a dinner in the capital Monday. The efforts are paying off, with 96% of respondents in a recent community survey saying the government should renegotiate the mine contract. Quote, the needle has moved, end quote, she said. So those are your news stories. Now let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 4.17%, and that is down 0.2% on the week. So U.S. 10-year yield continues to fall here, perhaps on recession fears and the tariffs, a bit of a risk-off trade. The UK 10-year gilt is yielding 4.52%. That is down 0.05%, so we're not seeing the same impact in Europe. The Italy 10-year bond is yielding 3.53%. That is down 0.04% from last week. And the German 10-year Bund edges slightly lower, yielding 2.47%. That is down 0.02%. And finally, the Japanese 10-year bond is yielding 1.42%. That is up 0.04% on the week. So Japanese 10-year bonds back in an upward direction. So interesting developments there. So U.S. 10-year yields falling. So perhaps a demand for U.S. Treasuries as people get concerned in the stock market as Europe continues to really edge sideways for the most part in their yields. Turning to precious metals, gold is trading at $2,924.80 per ounce. That is $30 lower than last week. Silver is trading at $32.46 per ounce. That is down 19 cents on the week. Platinum is trading at $965.90 per ounce. That is up $4 on the week. And palladium is trading at $944.50 per ounce. That is up $5 on the week. So precious metals edge sideways. Turning to industrial metals, copper is trading at $4.57 per pound. That is up 6 cents on the week. Iron ore is trading at $107.13 per metric ton. That is 30 cents higher than last week, so barely edging higher. Aluminum is slightly lower at $1.19 per pound. That is 2 cents lower than last week. Lead is slightly higher at 91 cents per pound. That is a penny higher than last week. Nickel is back above $7 at $7.22 per pound. That is 23 cents higher than last week. Tin is lower at $14.20 per pound. That is $1.08 lower than last week. Cobalt is higher at $10.45 per pound. That is 67 cents higher than last week. So finally, catching a little bit of a bid in cobalt. Lithium is trading at $10.30 per kilogram. That is down 16 cents on the week. Uranium is at $65.55 per pound. That is $1 higher than last week, so more or less edging sideways. And zinc is unchanged at $1.29 per pound. That is, again, unchanged on the week. Zooming out, it looks like a bit of a wait-and-see market in the metals. Perhaps some consolidation for gold above $2,900. Otherwise, metals, for the most part, edging sideways, with tin taking a bit of a break after outperforming last week. Perhaps prices are waiting to see what happens with tariffs. And those are your metal prices. Coming up, I'm very pleased to welcome back Dean McPherson, Global Head of Mining for TMX Group, on this week's podcast. To discuss how Dean is seeing the activity at the Toronto Stock Exchange and the TSX Venture Exchange, and how miners are doing within these markets, and also concerns about companies redomiciling, and also what is happening around the world, including Saudi Arabia. A very interesting discussion. I hope you enjoy it, and I will see you on the other side. Joining us today, I'm very pleased to welcome back to the Northern Miner Podcast, Dean McPherson, Head of Global Mining at TMX Group. Dean, welcome to the show.
Thank you, Adrian. It's a pleasure to be here as usual.
It's always wonderful to have you, Dean, and you always bring a very interesting perspective based where you are at TMX Group, which of course is the Toronto Stock Exchange and the TSX Venture Exchange. So PDAC is on the way here. I think actually this podcast will be launched during PDAC. What have you been up to this year? How are things going, I guess, big picture, to get us started?
It's been a busy first 2 months as usual. January and February has always been a bit of a busy time in the mining calendar, kickoff to the mining season leading up to PDAC. So, we started out with Roundup and the Vancouver Resource Investment Conference in Vancouver in mid-January. And from there, of course, it just kept being busy. We have a pretty global coverage. So we have people on the ground based in London, Graham Dallas, my colleague. And we have someone based in Australia, Sydney, Luke Alshorn, and of course, Guillaume Laguerre represents us in Latin America on the ground in Sao Paulo and covering Latin America. So I interact with those three guys pretty often. Of course, we have two people as well in the US. We have Delilah and Eric in West Coast, US and Texas. My colleague in Tel Aviv as well, Yossi. So has come on stream again. So yeah, we have a pretty global strategy in terms of connecting with companies, potential companies looking to join the equity capital markets. We think we have a pretty compelling story for pretty much all sectors, particularly the mining sector, So as a result, we tend to keep our ears on the ground and our presence is felt globally. So we had representation, myself and Graham were in Riyadh at the Future Minerals Forum. And that was the third installment of that event. And of course, we were in Miami around the Mines and Money Miami event as well, which is sort of a preview of the BMO conference that follows. That's just wrapping up, I think wrapped up yesterday. And of course, we're all getting excited for PDAC, which is the largest, we think, and the most important of them all. So everything is sort of an appetizer, really, leading up to PDAC, which starts on Monday. So yeah, pretty busy, pretty exciting. For us, the first part of the year, of course, is always a time of reflection and sort of assessment of what we can expect going forward based on everything that had transpired the year before. 2024, I think we would describe as an encouraging year, particularly in the late stage developed companies and larger cap companies. A lot of the capital has not returned to the junior end of the scale, but certainly we have seen a revival. A lot of reasons to be encouraged by what we saw last year in the middle part of the growth cycle, if you will. Some pretty large deals started out the year last year. We in February in 2024, I think that the Cobra Panama deal with First Quantum being in the state they were and being able to do one of the largest bought equity deals in our history, that sort of set a real good tone for that end of the market. I think it only continued. We saw several other deals. By the time May came around, we saw Hut Bay and a few others that were encouraging. And I think as the year progressed and the interest rate situation started to come down, the economy started to show some inflation situation in particular started to show some easing. I think that spelled very well for the market going into Q4. And so, yeah, it was a good year. We ended up the year, our issuers raising 10.4 billion in total, and that was quite encouraging, as I said, even though the markets generally are still not the best, not the peaks that we saw in 2021. But it's encouraging. And, when you look at even our nearest competitors, they're probably 3/4 of that in terms of capital raised through our markets. So very encouraging. We added 41 new companies to our markets as well. So we are now, I think we're just shy of 1,100 total companies listed with us on TSX and TSXV. So it's an encouraging year. And as I said, if we compare those numbers to the lows that we've been seeing from 2022 when the market fell off and 2023, we definitely have seen a turn in that trend. So that's encouraging. That has given us a lot of enthusiasm for this year. And I think the macroeconomic situation, what the Feds are doing, it creates a lot of encouragement for sure for 2025. I think a lot of that is perhaps tempered by a lot of the uncertainty around, people's expectations or lack thereof, I guess, I don't know, just with the change in administration in the US and how that's going to affect the markets and volatility that we've seen. But I think overall, there's still the overall sentiment is still a positive one. I think what will probably be required is a bit of patience to see how things roll out here going forward. But I'm certainly optimistic, and I think from my travels and conversations with stakeholders and players and bankers and companies, I think 2025 is going to be a pretty good year.
It should be interesting. I mean, you characterize it well. Like, I imagine, and tell me what you think of this. Like, I imagine it's a bit of a wait and see market as far as, all these tariffs that could come in and how that might affect a company, I guess, and
Absolutely.
where to domicile. Like, what are people talking about when you say go to Riyadh and you go to Miami and you're in Vancouver? What's the general, conversation that you're having?
Think on the junior end, it varies. On the junior end of the scale, the conversation is often about the frustration that the junior exploration companies are still feeling in their efforts to raise capital, So that is something that's consistent. And I understand, it's totally understandable. I think, especially with commodity prices being where they are, there is a bit of frustration in the market. When we say commodity prices, of course, the precious metals, of course, and copper as well. So base metals as well. So, there's a bit of frustration around that because, traditionally when commodity prices have done this well and reaching, we saw gold, playing with $3,000 US per ounce. Traditionally, when we have that sort of market activity as far as physical commodity is concerned, the equity markets tend to be, and the ability to raise capital tend to move in sync. And I think there's a bit of frustration in the market in that junior companies are just not seeing that in-step movement in their ability to raise capital, and oftentimes too for some of them in their commodity prices as well. So yeah, there are several theories why that might be so. We don't know, but certainly there's a lot of frustration. So that's one thing to answer your question that I observe. The other thing is that I would say the more advanced stage of the market into the senior companies, I think there's a lot more optimism. I think companies are optimistic going forward. That's kind of the general sense that I feel. I think it's a bit of a, as you said correctly, it's a bit of a wait and see atmosphere. I think there are a lot of changes happening in the US and as a result, Europe. And I think a lot of companies are not necessarily taking those changes as negative. They see a lot of positives, and I see companies positioning themselves to take advantage of some of those positive effects going forward. So wait and see vibe, that if you will, that I walked away with, that the market was optimistic but cautiously so and willing to see how things roll out here.
Very interesting. And say, like when you're in Riyadh, were you getting sort of a heightened sense of enthusiasm, shall we say, for investing, say, even in exploration companies or in mining?
Saudi has made it known that they intend to add mining to their economy as a sort of, sort of diversifying away from solely petrochemicals and oil. So, that's well out there. But I think a lot of people perhaps are missing the key part of that strategy is actually encouraging investment in mining within Saudi Arabia, within the kingdom. So they have a pretty aggressive and I think quite enticing proposition for global mining companies and exploration companies to come there to explore for resources because they think that they have a lot there and it's just underexplored naturally, right? So that's one thing. But the other, I would say, a B leg of their strategy is also to go outside and globally invest in mining companies. We saw last year or the year before, I can't remember when it was announced, the investment that their investment vehicle Manara did with Vale Base Metals. So, I think there are only going to be more of those type of investments that they're going to be doing globally. There are a few other companies that have already invested in, but I wouldn't be surprised to see them taking up positions, percentages, or even full positions in companies going forward. They've stated this, and I think we're going to see that rolling out more aggressively as we go forward, no doubt. But I think that's a B part of the strategy when you think about Saudi. I think many people miss the point that they're developing and marketing a plan for companies to come there into the kingdom to do exploration activity. And a few have done it. Barrick, of course, is quite active there. Another junior, Kayua Silver, is there as well. As well, we saw recently Power Nickel won a concession there as well. So I expect you'll see a lot more companies going there, and perhaps the ability to raise capital to explore those projects, I think, will only go up as companies go there and do exploration and we start seeing some good results. No doubt you'll see, like any other jurisdiction globally, you see investors encouraging companies to go to do more of that.
That's fascinating. Now, just kind of shifting over to a little bit of London and a little bit of Toronto. I mean, we hear about, Glencore and Rio Tinto considering, say, leaving the London Stock Exchange to supposedly, I guess, greener pastures at the New York Stock Exchange. And we also heard, I mean, pretty surprisingly, I think to a lot of people, Mark Bristow discuss, even Barrick, I think it was in the Globe and Mail, moving over to the U.S. So do you have any thoughts on, say, these kinds of moves? What do you have to say about that?
Well, first of all, the Barrick announcement is not necessarily a surprise. I mean, I think every 5 years or so that surfaces that Barrick is considering moving their domicile to the US. About 5 years ago, I think was the last time it came up. As to the others, as I said earlier, with the change in the US, the change in the administration and their philosophy on the way they intend to administer their affairs, I think it's only natural that companies will start to consider their options. So I think that's what's happening. As far as Rio Tinto and Glencore are concerned, I'm not surprised by that as well, because I think as companies look at the markets globally, they see opportunities to reposition themselves. I don't want to speak ill of London or competitors, but I think it's been well rumored. Let's say there's nothing, everything is out there in the public. It's well rumored that London has been under a bit of stress recently. So it's not a surprise, really. If you follow the mining sector, this has been showing up for a while. We saw, I think, London right now in terms of market cap. I'm not sure where it's at right now, but the market cap fell significantly. The capital formation business has sort of been a backseat sector for the LSC group, right? So I think that's what's playing out as larger mining companies. We saw, I think Rio Tinto did some change of their listing in terms of primary listing with the ASX, and now we're hearing about Glencore and Barrick. I don't think it's unusual at all. I think it's just companies moving their domicile to suit their business and their strategy. In the case of Barrick, I'm not sure if the article mentioned what would be the motive, but I remember 5 years ago the motive was to access passive investment in the US, which they walked away from. I think it didn't make sense at the time. So who knows? As I said, these are still rumors. So the company hasn't come out to actually say it yet. So we'll see. For us, it's fine. We have our connection with the US market and US investors is quite significant. Perhaps it is the strongest link that we have in terms of our clearing house and US clearing houses. And the ability for investors to move between the two markets is world leading. I don't think there's any other relationship globally as strong as that. So our relationship with the US is quite significant. So, we see ourselves as being a complement to that market. We bring expertise when it comes to mining. We bring knowledge, expertise, ecosystem that is close to 200 years in the mining sector. So as the US embraces the mining sector going forward, and mining financing, we see ourselves as having a significant role to play in that because we have been. It's already going on. It's already established. Most of our issuers on the mining issuers on the TSX are dual listed between the two markets. So for us, if one of our issuers decides to change their domicile because of their strategy, then that's fine as well. And we've seen it in many instances over the past year, of course, in response to a totally different situation.
And how did the TSX and the TSX Venture perform last year? Like, did they grow in market cap? What's your sense of how they did?
We did pretty well. We have every year in terms of the venture. As I said, I think most of it had to do with the commodity pricing, but our markets did pretty well last year. We're up to on the venture. We have a measure every year. We have a program called the Venture 50, which sort of looks at the top performing 50 companies in terms of share movement. So in terms of market capitalization change, we factor in volume traded, of course. So we call it the Venture 50 program. And this year, 31 of those companies were the top 50 performing companies were mining companies. So some might say not surprising because we have so many mining companies that the venture is dominated by mining companies. But still, it shows, an average return for the mining sector of over 255%. So interestingly, the top performing mining company on this list was Power Nickel. So, but quite diversified, mostly gold and silver. So the precious metals players showed up a lot, but as I said, diversified. So you had the uranium guys in there as well, and we had base metals guys in there as well. So it's sort of reflective of the market in terms of where we saw commodity prices excelling last year. So I think those companies got rewarded, and certainly the management team of those companies, congratulations to all the companies that made that list, that Venture 50 list, because what we're seeing more and more is that, what has changed is that investors tend to focus more on management and jurisdiction as part of their risk calculation. So yeah, we thought it was pretty good that in a year that was so often labeled as rough, tough, to see our top 50 performers on the venture being mining, 31 of those being mining companies and posting average returns of 255%. I think that's pretty outstanding.
One of the issues we often hear, say, with exploration is raising capital. You did mention that First Quantum did quite well in that regard last year. How is it going for Canadian mining companies, big and small, as far as raising capital? Are things starting to loosen up a little bit?
Well, yeah, I think so. I think in terms of, okay, so loosen up relative to the year 2023 or 2022, 2024, as I said at the top, was a very encouraging year, definitely. And we ended the year with 10.4 billion raised to our market. So a very encouraging year. And as I said at the start, we had a huge record-breaking bought deal from First Quantum, but that only continued throughout the year as the markets, got better, especially from the economic standpoint. I think a large bracket around the market was the global conflicts in terms of the war in Ukraine, and after that, the Middle East conflict as well. So those two things were weighing on the market. But I think as the year progressed, the interest rate situation in North America finally, and globally really, the easing of rates helped the market significantly. And so what I saw last year was, you use this word easing. I would say, yeah, easing in the sense that money started flowing into the market. That's why we ended up with 10 billion, over 10.4 billion raised by our issuers, right? What was still there though, there was still some risk. We still had the geopolitical situation was still in place up to the end of last year. We still have the war in Ukraine, and we still have the conflict in the Middle East. So those factors, I think, sort of kept a bracket on the risk appetite of investors. And so when you talk about risk in mining, that risk inherently increases for junior companies. So that combined with those external factors, the junior guys still, and I'm talking about early stage exploration companies here, they still struggle. It's not as easy as it used to be, especially with commodity prices being where they are. Historically, companies didn't have to struggle as much as they are now with gold and silver and copper being at these levels, right? So yeah, that's the new world that we're in, is that risk is a ever-present factor. So yeah, the optimism is that as the year goes on, we've certainly seen some things that have been happening since the start of the year that is encouraging, that those geopolitical, as I said earlier, it's a bit of an optimistic outlook, but let's hope and see if globally the two major geopolitical situations will be removed. And I think now, perhaps the tariff uncertainty is replacing those two, but certainly I think what investors are thinking, perhaps that's a smaller factor than two major geopolitical hotspots that were hampering global economy in many respects and affecting inflation, which as a result brought in high interest rate situations, which hurts the market. So we'll see. Easing, yes. At the junior level, perhaps less so. And they're certainly talking about it. So the struggle continues there. But I think companies are still fighting through and raising capital. It's not dead. It's not as bad as you would think. I think perhaps one thing I keep telling people is that perhaps there's been a structural change in the market. And so that's something to consider, I don't know if we're going to go back to what we had 15 years ago. Everything has changed now.
Indeed. And it feels like it's changing by the week here. And one of the interesting aspects of the tariff discussion between, say, the United States and Canada is all of a sudden you saw kind of a renewed I almost want to call it an awakening of sorts from the Canadian public and, even politicians saying we need to focus on, developing our own resources. You saw the BC Premier come out and say, okay, here's our list of 20 projects that we want to fast track now.
Exactly.
So you've been a part of this, really an institution in Canada, TMX Group, that does, run the Toronto Stock Exchange and the TSX Venture Exchange. What is it that, for any policymakers that might be listening, what is it that government can do, in a sense, to help streamline your job or what the exchange is doing to help really foster mineral exploration in Canada?
I would say one of the most impressive governments at provincial level in our observation is the Quebec government and their approach to attracting mining companies. And certainly it's encouraging. It's very encouraging to see what the BC government, their response has been. And you're totally right. This is, often, people get caught up in the headlines and tend to miss the opportunities that might be lurking just below those headlines. And I think as you mentioned here, one of those opportunities is exactly that. It sort of brought us out of our slumber to realize that we have something significant here and we can do better in fostering investment and growth in the mining sector. One of the big challenges of mining companies in Canada has been regulatory handcuffs, just getting projects permitted is just unacceptable, the time that's required and the hoops and double activities that need to be done. It's very frustrating. So my optimism is that with the US being more aggressive in many areas, these are things that might be addressed in Canada. I think, we've been frustrated for the past year in particular, and for the past 2 years maybe, with the Canadian government at the federal level and their approach to dealing with companies through the Investment Canada Act. I think that's another area that you probably see a more sensible approach, because we just can't afford not to be sensible and be business-like anymore. So I think those are attitudes and perhaps policies eventually that will improve as a result of the world that has been presented to us since the start of this year, since January 20th, So I think there are some positives to be taken out. It forces us to be more business-like, if you will, and really just to apply some common sense to our policies. Nobody's saying a lot of these policies and regulations are put in place for reasons that I think everybody would agree has good intentions, but sometimes we tend to lose sight of common sense in applying those regulations. So I'm hopeful that those benefits will continue going forward.
Okay, excellent. And finally, for PDAC, does TMX Group have anything planned? Is there anything you can share with the audience of maybe ways of participating in TMX events at PDAC?
Absolutely. TMX has always been very active during PDAC, and this year is no different. We're celebrating mining. We have market close on Friday, February 28th, with the PDAC group themselves sort of kicking off the conference. So that shows up on BNN and on the social media platforms. It's become an annual thing where we join Lisa team at PDAC and celebrate the event, another start of PDAC. In addition to that, on Monday morning, we're having a market open, which is significant. We call it the North American Mining Market Open. So this is where we collaborate with our US delegates and companies who have projects in the US and Canada, get together and we do a market open to celebrate North American mining. We have one as well on Tuesday morning where we do a LATAM market open, and on Wednesday morning we do an Australian market open. On Monday as well, we have a roundtable with Minister Wilkinson to talk about some of their thoughts around the mineral exploration tax credit, METC. So we'll see what comes out of that roundtable on Monday morning. In addition to that, we have several CEO roundtables with countries from Latin America to Ukraine to Uzbekistan and Peru. We have a Peru roundtable as well. So we try to use PDAC as an opportunity to bring companies and stakeholders together and give our issuers and stakeholders in Canada an opportunity to connect with governments and operators and regulators in far-flung jurisdictions, which they might otherwise not have an opportunity to communicate with. So we're pretty excited about it. We also have the Minister of Mining from Argentina, Luis Lucero, who will be here, and also their finance minister from Argentina, Karina Mele, Javier Mele's sister and a key operator in the Argentinian government, will be at a few of our roundtables as well. So it's going to be an exciting week. It's going to be a very busy week as usual, and I'll be all exhausted at the end, I'm sure, but it's usually worthwhile. And as I said, a great opportunity for people to communicate with people that they might otherwise not have a chance to talk to. So we play a big part in that, in bringing stakeholders together here.
Dean McPherson, Head of Global Mining at TMX Group, thank you for joining us and sharing everything you're working on at the TSX Venture and Toronto Stock Exchange.
My pleasure, Adrian. Thank you for having me.
Thank you once again to Mineral Process Control for sponsoring this week's episode of the Northern Miner Podcast. You can find out more at mineralprocesscontrol.com.au. And thank you also to Dean McPherson for appearing on this week's episode. And thank you, dear listener, for continuing to support this program. Hope you have a wonderful time. If you're over at PDAC, stop by our booth. If you want to help out the podcast, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.